Ooh.
So I have an amazing guest, a very special guest with me today. Hugh Henne. He is uh, to say the very least, a revolutionary sensation on FinTwit, on the whole finance Twitter community. He's made a presence like no other. Hugh Henne, I really appreciate you coming on. This is a dream come true for me personally, as I follow your Twitter very religiously. I, pay attention to all of your due diligence on specific names. So with that, I really, really appreciate it.
Yeah, hey Max, thanks for having me on. And that was a really nice intro. I'm really happy, and I was really grateful that you invited me on.
Of course. So, and to just mention off the bat, and some of the viewers may know that, you know, typically the interviewees on this show are biased towards economics, econometrics, macro, global macro, that kind of thing. So I thought, but also I do day trade myself, and many of the viewers do as well. So I thought adding a spice, a little different flavor to the finance community would be very, very vital and beneficial. So to top off, Hugh, why don't we just take a deep dive into your journey? How did this all start? We all really want to know, how
Yeah,
this all
definitely.
started.
Yeah, definitely. So, I was an athlete in high school. I was playing two, three sports in a year, and I loved it. It was everything that I wanted, and that was the only thing that I was thinking about really was that sports during that time. And got a heart condition which wouldn't allow me to play sports, or it would restrict my playing. So at that point, I kind of realized that I had to start thinking about things outside of sports and outside of high school. And my cousin worked at a hedge fund and works at a hedge fund, and he gave me two books. Those two books were the Turtle Trader, the Complete Turtle Trader. And what that basically did was it took 10, this fantastic trader took 10 random people, and in if I think, I'm not remembering, but I think it was in 3 months, made them like profitable traders with a strategy, and basically proving the point that anybody can do this job. And then it was the Simple Investor, and those two just really really transitioned my fire for sports into trading and just the markets overall. Just the great thing about the markets is that it's so competitive. There's not necessarily always a winner and a loser, but the numbers don't lie. The people that stay in this game for 10, 15, 20 years, they're winners. And so that's how I really thought about it. I love the competitive edge. I love that 90% of the people, or 90% of people that tried, failed. So even when I was failing, I was like, I'm just one of everybody else. So when I started to become successful, that just really fueled my fire, and I was able, like I said, to take that passion from sports and transition it into trading in the markets.
Fantastic. It sounds like you had a real deep motive that supported your trading journey, and that truly is, I mean, admirable. So Hugh, I mean, we've talked a little bit about your journey. Let's talk a little bit, intro a little bit about your analytical framework within trading itself. That could be a broad base of things, whether you want to dependence on time frame, price action. What kind of trader are you? Maybe you want to begin with that.
Yeah, definitely. So when I first started trading, I tried to do everything. I've tried to be a day trader. I tried to be, I'd started out inside the ARB community. And what ARB is that basically you would buy something. So for instance, I would buy Google after hours inside the United States. And then if I had an edge, meaning that I knew that it would open up higher in Hong Kong or Japan, then I would take that and then sell it in Hong Kong and Japan for 1 or 2% gains. But I knew that wasn't what I wanted. I was here for the fast, the fast gains, the in and out, but not necessarily. And so that's what really led me to being a day trader. And I instantly failed at that. And I realized that day trading was not for me. I was a horrible day trader. I still am. I still, I enjoy day trading a little bit, but I allocate just enough of my portfolio so that even if I lose it all, it's a scratch. And so I really worked my way around it, options, day trading, and I found myself with short-term swing trading. And basically what that means is that, I dig into a company. Maybe the sweet spot for me is really 6 to 8 weeks from a catalyst. And throughout that 6 to 8 weeks, I compile a position and DD. So, this gives me time so that I can still go and have a life. My mom and my girlfriend would say differently, but with day trading, you have to be there constantly. And the part that I liked about swing trading, like yourself, was that I had college, or I still have college. So it wasn't convenient for me to be in class. I had tried doing it in high school. I was trying to scalp, which this is completely not a thing anymore, but I would try and scalp pricing contracts of options, pricing differences. But with the algos and stuff like that, now that's completely gone. It's not even close to a thing anymore. But with school, I'm sure like yourself, Max, it's impossible. Sometimes, most days, it's impossible, even if you work your schedule around it. And so I was literally
Yeah.
just bleeding money because I would have class and I would skip class for as long as possible. But at some point you have to go.
Yeah.
Yeah. So, at some point you have to go, and I was just bleeding money. I would be up like 2% on something, and I'd be like, man, like this thing could really just rip. And I would go to class, and I would come out of class and be down 15, 16, 17%. So I decided day trading wasn't for me. And when I really got into the swing trading was when it was really like up to you. It wasn't on the whim. I'll compile a list of 30 to 40 different companies. And from there, I dig into it, see what's the valuation on this? Is this thing trading comparable to others? Is this kind of like a hidden gem? One of the ones that I really like to go back to is right around this time last year was WTRH. And that one, basically the company was trading at $5 a share, and the Rockets owner, Fatidum, came in and bought the company and tanked it on purpose so that he could completely reorganize it, rebrand it, everything like that nature, and change the business model. And now it's trading at $4 a share again. And so that was one where, perfect example, the thesis came together, the position came together, there was a catalyst for their earnings, and also it was a food delivery company, so Corona was locking down. It was the perfect swing trade. But again, part of the reason I also like swing trading is because it makes you it makes you hold. And even on WTRH, I was down 18%, which is why I think this market is just insane, because it's rare now that you're down on a swing trade until the catalyst comes. It's rare. Before, even this time last year, I can look back at 5 of the 6 that I was holding, and I was down on all of them. Even WTRH, like I said, I said this last Sunday, I was down 18%, and it went 700%. But now, you're down 9%, and it's like, whoa, like, geez, like this thing is kicking my ass. So that's kind of how I found swing trading. I got a little off topic there, but that's really where my passion is really getting into a company and understanding it, and really going from there. I really do enjoy getting to learn a little bit about the management team. Sometimes I look at the management team, I'm like, oh man, these guys are a bunch of crooks, and I'll move on. But you come across and you start talking to investor relations, and on a few occasions they start to know my name on like a personal level. They're like, well, one person DM'd me, and they're like, Hugh, I recognize this email, and I was, and another one had listened to the podcast, and had heard that I used 5 different emails to do DD, and she had said that she had known that it was my emails because of the spelling mistakes, and so it gets to be fun, and
Right.
I really like digging into a company.
Fantastic. And I think the more the merrier. I mean, the whole 9 yards.
Yeah.
It's funny. That leads to my next question as well. I mean, we're in an environment where, in terms of the stock market, where fundamentals don't matter, right? Yeah, I remember throughout the Twitter community months ago, and even now, so with particular names, even from back then that have withholds its status, a lot of them have turned over to the downside. Some of them have, sustained its extended price, but a lot of them have turned over negative, whether it's year over year, whatever. But the momentum has really shifted, and part of that rapid sector rotation, from SPACs, that money flow going to somewhere else, um, you know, can this rapid rotation continue? How long can it continue? And this momentous behavior, is it only in areas of financial repression? In other words, is it only in areas of euphoric, kind of pricing positions, or etc.?
Yeah, no, that's a really good question. And I think that fundamentals still do play a key part into trading and even investing as a whole. But in that being said, it can't be anything. Tesla bears, if they had, I mean, the ones that did go based on the fundamental, when they went short based on the fundamentals, they're down, I think, trillions at this point.
Right.
So I think that it does still play a key role. And one of my favorite setups is something that is undervalued right now in trade, because we're seeing things like PLTR trading at 50 times revenue. And so when I do find a company that I really like for the future in an emerging market, trading at or below, real fundamental value, that is when I really see like a potential home run. Because once these things get going, it gets so crazy. And you touched on it. We're in SPAC nation right now, and we're seeing. I think we're seeing 50 times. I know we're seeing like 5 times last year the amount of SPACs already that are uplisting. But this brings me back to 2008. 2007, 2008, I touched on it a lot, but the China Hustle movie is a great movie, and it talks about reverse mergers and how shady companies were able to list on the stock exchange through a reverse merger. And that's kind of what we're seeing with the SPAC market, is that you're seeing companies that might not always be able to get listed, do a SPAC and merge with a SPAC and be able to uplist to the New York Stock Exchange. And right now we're seeing companies that, that are better fundamentally, but I think that in the next few months and the next few years, there's going to be slick money. I like to call it slick money, meaning, maybe companies that have they're not out for the shareholders at all. And they're just out for their own profit list. And I think that's when we really start to see a huge issue inside the SPAC sector. But to touch on your point about fundamentals, we're not just seeing equities go up. I mean, we're seeing across the board crypto. I mean, Bitcoin had a pullback today. It was like $3,000 or something, or 3,000. Do we call it dollars? Do we call Bitcoin dollars, or 3,000 points? We had a pullback. Yeah. 3,000 coin dollars. And 2 years ago, that would be like 50% of a pullback. And now it's like nothing. So we're seeing an inflated market everywhere. But, that's what happens when you bring together working from home, the Fed buying whatever the hell it wants, mass amounts of whatever they want, 120 billion every month. That's absurd. And then you put in traders working from home, 90 million accounts being opened. And it's like a perfect storm. Nate Mashad, who I talked to recently, tweeted about 90% of people losing this game. And right now in this moment, 90% of people in this game are winning. And that kind of made me stop and think like, wow, that's deep,
Yeah, that is deep. I'm thinking myself right now. That is something to grasp on. And,
Yep.
it's also interesting. You see Tesla. Tesla, well, they've sold like 500,000 cars, and they're trading at a multiple. The market's priced them at a multiple that's worth more than all of the German automakers combined.
Yep.
I saw that some chart some time ago, but
Yep.
it's crazy. And then the Airbnb and those IPOs, the market is pricing things at just unbelievable valuations. So I know you established that you're more of a swing trader.
Yep.
But if one were to be momentum biased, which I think a lot of people are, I mean, the stock market per se is momentum right now, given the way that it's doing things. But if one were to take advantage of a momentous move, whether it's in some of these, you could call it pump and dumps, or, innovative, kind of spikes, whatever you call it. Um, I mean, how do you take advantage of that? How, whether it's scalp trading or trading a breakout or some kind of chart patterns, what's the most efficient process?
Yeah, definitely. I know a lot of different traders love these kind of strategies, and I mean, Gary, Noctorious Alerts or whatever. He's excellent at this. There's a few different things. It's all comes down to setting up a strategy, and part of there's a few different strategies. If you're a breakout trader, you buy the breakout, but then you're only scalping for a few cents, because if it pops up and then it fails, then now you just bought the top of the range. That's another thing, is that, you want to identify the range. You want to see, okay, where can this thing go realistically, up and down? You don't want to be necessarily buying, you don't want to necessarily be buying the top of the range, but you also don't want to be selling the bottom of the range. And so by identifying those ranges, you can really create a really good plan. I mean, I know a trader who he identifies ranges on like 10 different stocks, and all he does is he buys the bottom of the range, sells the top of the range, buys the bottom, sells the top. And then when there's a new range, a new range that's identified, he does the same thing, and he makes a great living. He's not looking for anything crazy, but
Right.
that's what he does. And it can be intraday. It can be, it can be over like a week period. So, let's talk about like a monthly chart. And then, if you're going to be a day trader based on the news, because that seems like the hot thing, if you will, there's a few things that really comes down to it. The volume has to stay there. If it trades 10 million shares before open, and then inside the first hour it trades, like 500,000 shares, then it's just going to sink. There's not enough volume there. You need the volume, and you need the relative volume. So if this thing trades 20 million shares and it's trading 100 million shares, that's a great candidate, especially if the float is underneath that 100 million, the outstanding shares of the float, then you can really, I mean, that thing can churn and do some damage. The other thing that's really important is having screen time, because what you'll start to see is that you'll see something come down to support, and you'll just start to see soaking. And what I mean by that is that, they'll bring it down a little bit, but then they pop it right back up, bring it down a little bit. And when you see that, that's a clear indication that somebody's just loading this thing. And it doesn't necessarily mean that it's an individual person. It could be a market maker. And that's when you see those type of moves like Sava. I was trying to short Sava, and I didn't even see the soaking. I ended up taking a nap, and I came back, and I was down It was the most expensive nap I've ever had, Max. This is the first time you're the first person that I'm telling this about. Yeah, I came back from my nap because I was like, this thing's up like huge. Like, there's just no way. And so I got stopped out like 4% from the high. And what was a massive loss was really, if I had stuck to my strategy, would have been a massive win. But on the same token, even though I was short on the long side, you have to get really good at feeling out different trades. You don't have to necessarily know every ticker, but you have to get a feel. Okay, how does it work against this 20? How does it work against here? How does it usually bounce? Does it usually bounce on the 9 EMA, or does it usually like to come down to the 20? Does it usually like to pop against the 200? Different things like that nature can really make it so that you have an edge, because when it comes down to day trading, you need an edge. And an edge of it's going to go up is not an edge. So when you combine something like relative volume plus buying on support and selling, close to resistance. So, for instance, another strategy would be, identifying support, taking a starter on support. When it starts to confirm and curl back up, you scale in. You take half off at the resistance, but then if it breaks through, then great. Then now you're off and running, and you still have half your position. But let's say that you have your starter at support and it breaks down support. Now you're taking a scratch. So that's another really, that's a way that you can minimize risk. But if you are into day trading and momentum trading, that's a way that you can really, have an edge. But the real thing is going to be, paying attention to volume, kind of feeling out the trade. Is it soaking, or are they just going to let this thing pop up and then flush it? I think it was VCNX was a really good example on Friday. Friday the 18th, I think it was, where they ran it up, came back down, soaked it, and then soaked it, and then they ran it up again to like $9, and then they just flushed it, and it never even popped back up. So if you were buying that dip at 9, if you didn't understand that the flush came and that wasn't a buyable dip, then you would have gotten slaughtered.
Wow. And how do you know that it's it's not just a dump versus something that's making a higher low, for instance?
Yeah, part of that's going to be really being inside the action and kind of feeling it out. That's not like the answer that everybody wants to hear, but you just get you start to get a feeling for it. Like, for instance, when it flushed, this 1 minute candle had flushed all the way down. I think this was around 10:30. It had flushed all the way down to where it was at open. So it took away an hour's worth of gains. And on the chart, it only looks like this big. That looked big, like maybe like this big on the chart. But I mean, somebody wanted out, and that usually says a few different things. And then if you don't see it, when it comes down, and then if it doesn't snap right back up, that's a clear sign to just be done with it. But in the same token, you'll see something, flush and then trickle down, and then one last flush, and then it snaps back up. That's a bullish sign. So, the snap back up is the bullish sign. The snap down is, I know I sound like a lunatic, but when it comes up and it snaps down and then it doesn't snap back up and it snaps down again, that's somebody's trying to get out. And that's a clear momentum change. And that part of that comes with screen time and watching level 2 and watching the tape. Tape reading and knowing price action is really important, which, for swing traders, understanding if there's a massive buyer in there or if there's a massive seller in there. This reminds me of OTLK, overstock.com. Last year, I had seen a huge Belgium seller in, and what this guy was doing was he was just selling this thing into the ground. It was at 30. He ran it down to 8, and I was like, man, this is perfect. He ran it down to 3, and I was like, geez, oh man, like this guy's gonna, this guy's got to be out of shares soon. Second, he was done shares. Literally V recovery all the way back to 50, and then they announced a special dividend and a special dividend and a new technology. It was trading at like 140 within 2 months. Wow. So, but if you didn't understand that there was a seller in there and you didn't understand the tape, then you probably would have gotten stopped out and you would have looked at the back of that massive trade. So I think the easy answer is, to have a strategy and to understand volume, to understand, that you need to have a really set strategy and you need to identify a pattern. So, when something, if you're a momentum trader, you need to identify and you need to be able to hang your hat on a type of strategy. So you need to say, okay, this reminds me of this stock. So for instance, if ABC gets news and you just saw XYZ do a similar chart pattern, you need to be identify that like that. And you need to say, okay, this is what I think it's going to do. If it does do this, this is what I'm going to do. If it doesn't do this, this is how I'm going to react. And that's what I really think it comes down to. As I started, when I was when I was younger in my career, I was a gunslinger. Like I had no plan. I was just throwing money at the wall, hoping it would stick. And as I get older into my career, I realized that the only people that don't last are the people with risk management. The worst traders in the world last because they have risk management. Um, but of course, then it comes down to the conversation of understanding that that risk management is also not being too risk adverse, and I think that that's a fine line that comes with experience.
Yeah, absolutely. Those are really, really sound principles. I mean, hearing from the best as well. I mean, you can't get much better than that. We don't have too much time here. Unfortunately, I'd be asking you millions and millions of more questions. But for the sake of time, let's just end it off with one last question here real quick. And because I'm very interested in hearing
Yeah.
you, what have you learned from your career as a trader? What have you learned thus far?
Yeah, that we might be here a while, but I think the best thing to understand is that what I know is only the tip of the iceberg. Even now, I see these guys come in, and you have a good month, and you have a good month, and you think you know everything, and then all of a sudden, 3 weeks later, you're back. Not only did you lose the profit that you made, but you were also now down from your original investment. And then that starts messing with your syncope. So I think understanding that you have no control, don't fight the trend. When I'm wrong, I'm wrong. I mean, it hurts. But you have to understand, a lot of traders use this analogy, but in baseball, if you're right, I mean, could you imagine if there was someone who had a 500 batting average? They would be tested for PEDs every single day. So if I can hit, 4 out of 10 trades, but have good risk management, you're going to be one of the best traders that out there. In this market, it feels like everybody and their mother is 10 for 10. When we come back to a real market, it's going to be about risk management. I think understanding that I only know the tip of the iceberg. There's so much more that I can learn. There's so much more out there. And that's what I love about this game is that, even when I had a huge loss on Saba, I could come back and say, okay, I have so much to learn. This could have been one of my biggest wins ever. And instead I let it be one of my biggest losses ever. So with that being said, I think, coming into the market, you'll get humbled eventually. It's happened to me a few times, more than a few times. I don't have enough fingers to count how many times it's humbled me. And I think that, when I started to realize that I have no control over it and it just is what it is, and that I'm playing by the market's rules and that the house never loses, I think that that's when I really started to, that's when I really started to change the way that I traded. And that's when I really started to become pretty profitable. And it's always trying to learn. It's always trying to learn, trying to get better. And it doesn't necessarily mean that I'm focusing in on getting better at this, this topic, but understanding that there's always room to run. And that, I hate the expression I saw today, free money. I hate the expression when traders say, oh, this right here is free money. Because it's not, we see lots, we see UWMC. I think both of them together are down like 40% since the merger. And, I heard someone saying, it's down 9 days in a row. It can't be down 10 days in a row. Then that guy said, it's down 10 days in a row. It can't be down 11 days in a row. It's down 12 days in a row. Yeah. And this is a never ending cycle. And so I think that, I think that that's one of those times where that trader might've gotten humbled. And I think that that's a really, really good lesson is that, you don't know anything as much as you know. Even Ray Dalio, I think he's a fantastic hedge fund manager. I think, he has a really good grasp on the markets. And, I love his book Principles, but, he was asking his father for rent money in the 80s. And I think that, that him having to do that with a wife and kids really, he went from thinking he was a hotshot. He created the bond market. And so for him to go from that to asking his father for money, I think I don't think he'd be the hedge fund manager that he is. And I think that, it just really taught me that, I really know nothing. As much as I do think I know, I don't. And I think that that's a huge asset.
Right. Those are some really wise words, Hugh. Really admirable. Like I said earlier, for the sake of time, that was the last question I have for you. But Hugh Henne, everyone, this was a great pleasure. I really appreciate you coming on once again. But before we go, do you want to share with the viewers, where to follow you, where to see your work, all the likes?
Yeah, definitely. So my Twitter is Hugh_Henne. So that's HUGH_HENNE. And my podcast is PGIR, Pennies Going in Raw, on Spotify, Apple, all the major podcast sites.
Excellent. And of course, we'll have that info in the link of the description below. Hugh Henne, everyone, thank you very much.
Hey, thanks, Max.